Friday, February 7th, market analysis. Stan Ehrlich, good morning. 9:41 California time. I'm doing this a little bit earlier than usual, which is normally a little after 9:45, 10, maybe 10:05. Now, we have a bearish engulfing sell signal in the E-mini and other indexes, but it's not an ER signal. It's just simply an outside down day or bearish engulfing candlestick, which usually means the market's going to work lower. It doesn't tell you how far it's going to go down or how long it's going to last, but it tells you the market's more likely than not going to go down, which is exactly what I was hoping for. As you know, in the last couple of weeks, I'm thinking that the market has been forming some sort of a top formation, not huge, not super bearish, but this does lead on the E-mini to a downside objective of 54. Let's call it 54.50 to round it. And that would be close to the lows made last August. So it's pretty profound. But again, I don't think this is the beginning of a bear market. I think it's just the beginning of a fairly large technical correction. Okay, which could develop into something much more serious longer term, but I don't think so at this point. So we either have a double top forming on some of the indexes, and I'm going to call the E-mini a double top because I really can't justify the left-hand side being a shoulder. In some cases, you'll see it. I can, and I do. The double top has that downside objective, as I just said a moment ago, approximately 54.50. If we start to close below 58.10, the low between the two highs, that's your breakout. But this bearish engulfing, if we stay with a bearish engulfing, meaning at this point you have to close lower than yesterday's close. That's all. We've got the higher high, we've got the lower low. That cannot change. The close, well, we don't know yet. It's still open. But we're down 4.3 points in the spider jargon, or 43 lower in E-mini jargon. And that seems fairly likely to stay down, if not go down even more, which I would not be surprised. Next chart is the 1 minute data for the E-mini. Coming down. Next chart, spider, daily data, bearish engulfing, possible double top, like the E-mini, as you would expect. Also gap to close down here, another reason for it to go down to 585 to close the gap, but the breakout point is 575-ish, and the minimum downside objective for the double top, if it works correctly, is going to be 542, 543. Next chart is the 1 minute for the spider. Just a few minutes ago, made new lows for the session. Next, QQQs. We have a head and shoulder top I have outlined. First shoulder is a bearish engulfing ER official sell signal. That's why it's turned red on the price action right there. Oh, I guess I should do this. I'm sorry. Ding, ding. I should have put a red oval around that daily data bar to highlight it a little bit more because it's an official sell signal. It worked fine for a few days. Good money. Went up to the head, overbought, December 16. Down, created the pivot point for the neckline, second point. Now the neckline is upward slanted slightly. Good. Last shoulder high, approximately on time. That would be the amount of time from the first shoulder to the head is, well, how much time? Duplicate that amount of time from the head to the right, and you're going to get usually around the time period, if not exactly, when the last rally high should occur, and we did. So other than these two little rallies, which don't do any major damage, it probably should not have been there normally, but they didn't do any damage. And now this bearish engulfing is making it look like, as I said before, we're about to head south next. And here's the QQQ 1 minute chart coming down. Next, bearish engulfing in the NASDAQ, as you would expect. Head and shoulder top I outlined like the QQQ, as you would expect. Neckline is almost flat, not quite, like the QQQ, which you would expect. Minimum downside objective, 18,944-ish. These downside objectives, if I'm right, are going to take probably 2 to 4 months. Next, and I'll go with the shorter side, 2 to 3 months. Next, NASDAQ, 1 minute, coming down. Sorry about that cough. Bearish engulfing only a week ago, on Friday, a week ago, crashed on Monday, didn't close that bad, came back Tuesday, Wednesday, reversed somewhat yesterday, no bearish engulfing today. It's just simply coming down more. Minor little double top if you want to look at it that way for the last 2 weeks. But the bigger picture is the broader potential double top, with the highs being, of course, late November, early December, and last week. Downside objective, once we get below 490, call it 420, is going to be down to 38,301. Let's call it 38,300. Yeah, and the breakout's going to be below 4,200. Next, coming down on the 1 minute chart on the YM, as you would expect. And I think we could see new lows for the day before the day is over. Now, with Russell, another animal, but it was right up against the resistance, as I talked about in detail yesterday. We have seen this market top out again for the 1, 2, 3, 4, 5, 6 times, basically, in the last, 3 weeks? 6 times, right in that little resistance area. So obviously it's having a good effect, what you would expect, and we're down fairly sharply today, well below Thursday and Wednesday's lows. Next, and coming down some more likely than not, RTY, Russell, 1 minute chart, coming down, all of the indexes. Well, what about bonds? Gosh, we have an ER official red sell signal, bearish engulfing in overbought conditions. Bingo. Well, for the moment, I have to say bonds are about to head south. But we didn't get up to our minimum upside objective, which we came closer and closer and closer to, and the closest today. That was 117.5, and today's high is about 117 flat, give or take a tick or two. But the bearish engulfing says, okay, we're going to stall out right now, and we're going to start to come down some. Probably, I hope, crossing my fingers, not below the neckline, and then finally go up and close, reach the minimum upside objective, which again was 117.5, give or take a tick or two. So I'm looking for a minor downside correction for several days and then up again. And I'm basically bearish intermediate to long term in bonds because we have a 1.5 year potential double bottom. The last low was October 23 of 23, and a bullish engulfing ER buy signal just like the one we had on the low that was made on January 14th this year. Both of them. ER signals, green, bullish engulfing in oversold territory buy signal. Bingo. So far, one past tense, incredible pick. And now, very potentially, another whopper, already making about 15 points plus at the moment. Now, we're not out of the current trade because our stop is currently the little yellow line. That's what we call a smart trailing stop. And we're at the way it's set at the moment. We're at 14.14, and we're going to give away a little bit of our profit in order to finally get out. And I could tighten the stop up some. I might, but if I do, I'll tell you. Otherwise, I'm going to leave it where it is. That's the way the code is written. Historical information on the code. Good. Leave it alone. That has nothing to do with the chart pattern, which is a totally objective, visual, human interpretation of the way the market moves, not part of the ER signals code. We did buy, by the way, on January 15th, the exact tick low of the day, 1 day after the buy signal on the bottom of the market for months and months prior, and so far since January 14th. We bought the low the next day. Buy the code. The code did this for us. It wasn't my decision. I simply learned how to do this stuff with 53 years of trading background. Next, and brokerage and lecturing and blah, 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 a lot of other stuff. Now, we also have a bearish engulfing in the notes, no surprise, but a little bit different animal. We are having a lot of trouble here. This has only gotten about halfway up to its minimum upside objective on what appears to be a good head and shoulder bottom. It just that it delayed a whole 2 weeks before it finally broke out on Wednesday. And then Thursday, yesterday was down a little bit. That's not a problem. Today, it had damn well better stop going down because the low of the day is basically on the neckline, a couple ticks below it. If it starts to close below the neckline again, then I got to really throw out this pattern because you're not supposed to do that. Once you get above it on a closing basis, it's supposed to stay above it until the upside objective is either fulfilled or something else bad happens. This could be quote unquote bad happening, a bearish engulfing, too close to the neckline, no elbow room. We'll see what happens the next day or two. Next, crude. Almost a new low, oversold for 2 days, today being the second, bouncing a little bit at the moment. We might have a short-term low. We got oversold for the first time since last September when it bottomed out. So it might do it again. I wouldn't be surprised. Heating oil. Support's holding pretty good. Doesn't seem to be able to break out either way, up or down. My bias is slightly up, mostly because I think these lows in here are a very good support level, showing a lot since September, October, November, December of ability to bottom the market out, which it did, made new highs. Classic big rally up day, new highs for a few months. Came down to approximately, not quite exactly, the support or the previous highs. And it's trying to turn up, so we'll see. No major opinion at the moment. Doji also natural gas, but it's got a head and shoulder top. It already broke out classically, started to work down, came back up, tested last week, or was that Monday? That was Monday. And now, come on, start going down. Let's see new lows below this week's lows ASAP. Meanwhile, the damn thing is up here and just kind of floating around a little bit. I'd love to get a bearish engulfing. I know it won't be an ER sell signal. We're nowhere near overbought. Got to have both. And this is a custom RSI index. I learned RSI from Wells Wilder himself in the late 70s and 80s on the international lecture circuit. I gave about 150 of those conferences worldwide in close to 40 years. Loved it. Great travel, great people. So I think it's rolling over and about to head south. Next, overbought condition, a fourth day in a row, 5 days now out of 6 on gold. Like I said a day or two ago, I think it's rolling over a minor new high today by just a tiny bit and currently trading right around unchanged. Let's see if it starts to slip. Silver, resistance stopping the rally, lower on the day and is in very close proximity of having a bearish engulfing. Now, again, it didn't get overbought, so I will not have a red bearish engulfing like on that top right there to the exact day. And there's another great one on the high back there. They don't always occur at the highest high, and they don't always work. There's a good green one smack on the bottom. That red one didn't work. It took probably a very small loss or a very small profit. You really can't tell that much except for the signal itself on the daily data charts. You have to look at the short-term data chart in order to analyze better my particular ER signals, but I can't do that. It would take much too much time for this YouTube stuff. I do tutoring, by the way. If you're interested in me tutoring you, teaching this material on a much greater detail, contact me. info@ersignals.com. Next, bearish engulfing a few days ago, red signal on the high day for platinum. Platinum made a minor new high today, back into resistance, but it's giving it up. We're now a little lower on the day. If we get below yesterday's low, we will have another red ER sell signal, but that remains to happen. It hasn't happened yet. I said if it gets below yesterday's low, then it'll turn red and we'll have a second signal. I'm looking forward to it, but I don't think I'm going to get it. I am looking forward to it go down more. Next, high-grade copper overbought yesterday and again today, but wow, it plowed through the resistance area substantially. I didn't think it was going to do that. Also made a new high since last early October. Also major, huge support area. Now being left behind and a lot of trading range lower than the closing price is highly likely today. Breakout to the upside. I think the next move could be challenging the previous top of significance, 4.8. But first, we're going to have a correction down a little bit because of it being overbought and fairly significantly at 83. And then it's going to go up after that. So look for a minor downturn very soon and then up again. Next, soybeans, oil, meal, corn, wheat, meats, and then that stock XYZ. So grain markets in general. I'm trying to justify a very big, long-term, major bottom, the beginning of a multi-month, maybe even multi-year bottom. I've got a lot of it so far, but not completed. Soybeans basically came right on the edge of an upside breakout Wednesday. Couldn't do it, backed up, did nothing of significance yesterday, and it's sinking a little bit more today. I'm okay with it sinking off to 1032. I'm actually even okay with it sinking off as much as 1008, but I'm getting real nervous. If it got down below 985 is just a bit more than I expect. So some modest short-term, few days, a week, downside, and then to new highs. Soybean oil, essentially the same commentary. Bottom formation needs more strength to break out. Going to have a really big upside objective if it'll do it. Next, soybean meal. Same comment, triple bottom over a year and a half. Needs to get stronger, quicker, better, faster, etc. So far, it's still building trading range bottom, I think. Now with corn, we did have the bottom. It did form a head and shoulder bottom. It did break out to the upside, and it did fulfill the minimum upside objective. All of it worked with very little adjustments adjustments. Finally, we got there a week and a half ago. Well, actually 2 weeks ago, January 23. Now what? Back and forth trading range. These patterns are not necessarily the objective. It is a minimum objective. Can go a lot further. Already has gone a little further, not much. I'm looking at a little more correction and then maybe up again. Now, wheat. So I'm looking for wheat market to maybe have a little minor pullback. It got extremely close to overbought, but couldn't do the trick. So I'm going to hang up on that dumb phone call and call them back. So I like what I see, but I'm looking for higher levels. I think we could see wheat dip off just a little bit more. Cattle, unchanged currently. Doji got close to oversold, not quite. Looking for a rally. And I'm going to go to the YM or hogs first. And just a second. Wait a minute, please. Wait a minute. All right. So hogs probably up. Last chart, that stock support holding great. Checking on the E-mini real quick for you before I finish. And got a little bit of a bounce, but nothing bullish and no downside breakout. You guys have a great day and profitable trading to you.